There we go. So good morning, everybody. Welcome to Bridgwater Chamber of Commerce and Maxwell's Chartered Accountants Autumn Budget Briefing for Small Business. For those of you who don't know me, my name's Roger Smith. I am the General Manager of Bridgwater Chamber of Commerce. For those of you that haven't joined us recently, welcome to our brand new office, our nice spacious office. I will hand over to Gavin Roberts. Gavin is our Vice Chair and he is a partner at Maxwell's Chartered Accountants and he is the man in the know. So over to you, Gavin.
Thank you, Roger, and good morning, everyone. So what an introduction. The gospel according to Gavin, I think is where Roger was going when he suggested that he would like to spread the word. So so the budget was an interesting one, probably not as doom and gloom as maybe some of the commentators were expecting it to be. Still definitely not a budget for growth, for entrepreneurship, as far as I could see anyway. But certainly not the death of the small business that some of the commentators were perhaps predicting. So a mixed bag, and there was a lot to digest. Hopefully, we've distilled it down into not too long a presentation this morning for you, and we'll pick out the key elements. So I'll just go through a few bits. So we'll cover some personal tax aspects, the national insurance contributions, which is the real headline grabber, I think, from the budget. Business tax, VAT, inheritance tax, and capital gains tax. They're probably the second most talked about issues that came out. Some small issues on employment taxes, and then a few other updates as well. And then absolutely more than happy to take any questions and answer them to the best of my ability. So we'll start with personal tax, and I'll probably just start very simply by saying very little change, which is sometimes good. So it's boring, very boring, but boring can sometimes be good. It means that it allows us to plan, it allows us to have some kind of consistency, and business likes consistency, and it likes it likes to be able to plan and move forward with a definitive base. So personal tax, very little change. Personal allowances remained. High rate threshold remained. All the additional rate remained. The dividend allowance, as paltry as it is, remained at £500. There was a lot of talk that might go, which would have caused a lot of problems for Granny Smith, who is just receiving sort of £12.80 in dividend, and suddenly people were talking about she needing to do a tax return because of a £12 dividend, but that's remained, so that's not a problem. So that was something. There is a new residence-based tax regime from 2025 for UK domiciled individuals, for non-dom, sorry, not UK domiciled. Now those rules are quite complex. I don't think they're going to particularly hit small businesses. I'm happy to run through them in more detail with anybody who's particularly interested, but they are about trying to attract wealth back to the UK. That's what they're trying to do. Whether or not it works, I think, is probably we yet to see that. But that's what those rules are there. They've been playing with them for a few years, and this is probably the biggest change that we've seen. So we'll wait and see. And again, the ISAs and the saving limits, so all of them have been retained, same as the married couples and the blind person's allowances. If anybody's particularly interested in any of those. So yeah, they've got rid of the British ISA that was announced previously as well. They did a consultation on that, and they decided that they're going to scrap that. There was too much negative feedback on that. So that was that really. So that's personal tax, I think. So we'll move on to the national insurance contributions, and this is, as I said, the area that I think certainly the tabloids and the broadsheets picked up on, and probably rightly so. This is where the government said that they weren't gonna put any taxes up for the working people, for the working man, but they are looking to tax employers. The problem is, of course, that there are a large number of employers in the UK, a backbone, I would say, of business in the UK who are small and micro, who employ, only a handful of people, and they are being affected by these changes. And these people aren't, they're not, they're not self-employed for reasons of wanting to become conglomerate businesses. They're self-employed because they like the flexibility, and there's other reasons that they don't fit into the model of employment. They're entrepreneurial, for example. So these are the businesses that it's affecting, and the government not quite understanding that those businesses that work all of the hours to deliver food for their families on the table are not classed as the working people is maybe slightly disingenuous, is what I would suggest. But perhaps I'm being unfair. So I'll run through the national insurance contribution increase. So it was a 1.2% increase to 15% from April next year. So that in itself is not a huge increase. One would say, and that's certainly what the headlines were going with. It will obviously affect employers, but 1.2%. Oh well, it's not a huge amount. The big impact is where the secondary threshold has been reduced from 5,000. So that was at 9,100 down to 5,000. So that means that there is that every single employee that you have that was earning above £9,100 is being taxed, if you like, or NI'd on an additional £4,100 per annum at 15%. So around sort of £600 per employee, and obviously each employer will be slightly different, because you'll have part-time workers and casuals and people not quite earning up to the threshold and all the rest of it. But in general, that's what we're talking about, and actually that's quite an increase, and probably much more of an increase than the 1.2%, which was the headline grabber. However, the good thing is that there was an employment allowance increase from 5,000 to 10,500, and they've widened the eligibility slightly. So that is to cover some of this burden, this increase. So that is definite good news, and the numbers suggest, and again it will change from employer to employer, but effectively, if you employ somewhere in the region of 4 to 5 employees, then you're probably going to come out washing your face on this. You're probably not going to be affected too much. Anything more than 5, then you're going to start to see an impact, certainly from these increases, and that's where the national insurance changes come in. There were no changes to self-employed national insurance. There was no changes to employees' national insurance, and that was the big headline grabber. We're not taxing the working man. So it is purely these national insurance, which is on the employers. So that's probably quite important to note. Yeah, I think that's all I wanted to say on national insurance. Business tax, similar to personal tax, very little change. It's certainly no real change compared to what had been announced, I suppose, what we were expecting. There was a roadmap set out, which has kind of given us some clarity and for the next few years up to 2028, 2030, that gives us a good idea of where things are heading, which means that corporates, businesses can really plan effectively going forward. So the top rate, 25%. Obviously, many businesses earning less than 50,000 in profits are actually at 19%, but anywhere between 50,000 and 300,000, there's a hybrid rate, and then anything over 300,000 is 25% at the moment. Those rates are all retained, and there's that clarity and certainty about that moving forward as well. The annual allowance remains at 1 million. It's been there for a while now. Sort of previous governments have played with it, and it's gone from 250,000 right the way up and down all over the place, and it made some very difficult calculations for us poor accountants, and we've really struggled with some of that. But to have that continuity of 1 million is quite useful. Full expensing has been extended, and this is basically where you can write off your capital allowances, your expenditure on assets against your profits on new equipment, so that there are some strict eligibility for full expensing, but it does allow sort of the full write-off, and there's no cap on that. So it's quite a worthwhile allowance if you need to use that, and you've got a lot of capital expenditure. Again, not massively useful for small business necessarily, unless you're in a capital intensive industry. There was some new reliefs for visual effects and creative industries, probably not massively relevant for this briefing. And there was some simplification to the business rates, particularly along hospitality and retail and things like that. Again, some really useful simplifications and reliefs that came in there. Again, nothing major, nothing groundbreaking, but just useful business support really. And yeah, so we'll move forward again. Value-added tax. So again, very little on this one. The big one was the 20% standard rate on private school fees, which we knew about. It had been rumored and then announced quite a while ago. So that was confirmed, but yeah, that's definitely coming in. Again, it probably won't affect many of the small businesses, although possibly if you're into financial services, perhaps it might involve you. That's an additional 20% that those that are sending their children to private school have got to find. So it's an interesting point to look at there. The VAT registration limit remains at 90,000. So that was rumoured quite widely, actually, that was going to potentially come down or even go up. There were rumours both ways, but it's stuck at 90,000. It had obviously gone up from 85,000 previously, fairly recently in any case. So so that's VAT, and very little else has happened on VAT. which is yeah, not that exciting. But again, sometimes boring is good. Inheritance tax. So that's an interesting one, and I didn't mention it when we talked about personal tax, and I will mention it again here. So whilst there haven't been any changes to personal tax rates, bans, etc., and there isn't any changes to the nil rate bans of £325 and the residential rate of £175. They've been frozen until April 2030, which is good news in many respects. But what it does mean is that that they're not following inflation. So it's called fiscal drag. It means that that 175, that 325,000 is not worth the same in 2030 as it is in today's money, or indeed as it was in 2020 and previous to that when it was first brought in. So what we're doing is we're dragging more taxpayers into paying tax because these rates are being frozen. It's the same on the personal tax, the same on inheritance tax. So this fiscal drag is a backdoor way of taxing us without a headline tax increase. So there's a definite negative undertone from fiscal drag, and we need to be aware of that. We then got the agricultural property relief and the business property relief, and these have been cut. So previously, if you died and your estate and you had assets that were covered by the agricultural or business property exemption, then they were passed to your loved ones, the trustees of your estate, etc. With no inheritance tax at all. Now you've got a maximum of 1 million across the two pieces, plus 50% on anything over a million. So there's been sort of a clawback on 50% over a million, if you like. So this, whilst not immediately a problem for many people, I'm sure, imagine anybody's expecting to die imminently. This is going to have some fairly major implications on family businesses, on farming particularly, and in this area, then obviously agriculture is a huge business. So so there's going to need to be some serious work done in terms of inheritance tax planning and making sure that we're looking at how we pass property down through the family and through to the next generations, because this, whilst it wasn't previously a problem, we used to ignore the family farm, the business shares, the business property, the buildings, assets, etc. We're no longer going to be able to do that. That's now something that we're going to have to look at. So, and then probably finally on inheritance tax, pension funds are now going to come into charge. So whereas previously, if you had a pension fund, an unused pension fund, then it didn't form part of your death estate. It now does. So again, it's just another, just tips your estate into more value and therefore more inheritance tax. Again, it doesn't come until April 2027, and there's potentially planning that can be done there, but it's another one that we need to think about. So that's the inheritance tax. Capital gains. I think this was widely anticipated, and perhaps it wasn't as deadly as we were maybe expecting it to be. But the capital gains tax, which has been very cheap over the last decade and more, in fact, is now is a lot closer to the main rates of income tax. So we're now at 18% on the basic rate and 24% on the higher rate disposals from budget day, effectively. So yeah, so we were expecting that. It matches where we are with residential property, so no changes for residential property anyway. There's no changes to principal private residency relief. So if you own your own home and you sell that, there's potentially still no capital gains tax there in any case. But if you're selling a business or selling land or whatever it might be, then this is where your capital gains tax comes in, and certainly that is for those that are transacting in that's going to be a hit. Business asset disposal relief, that rate's increased. So this is a relief that used to be called entrepreneurs relief. Some people might know it as retirement relief. This is a 10%, it used to be 10% rate. So when you sell a business, there's a number of eligibility criteria, but effectively, if you sell your business at the end of its end of its life, when you're retiring, effectively, so you're no longer going to carry that business out yourself, you sell it. You can obtain a 10% rate of capital gains tax for the gain that you achieve on selling it. Over the years, we've had various different caps on it, but most recently it's been £1 million. The £1 million stays, but the rate moves from 10% to 14%. So there's been increases there, and it was widely suspected that the whole relief would go. So I think possibly we're expected to call that a win. Again, it only affects those people who are in that position that they're looking to dispose of their business. And again, there's investors relief lifetime limit reduced to £1 million, which is probably again more of a bespoke and relief that perhaps isn't relevant to a number of people. Okay, good. Oh, I've gone. Oh, I'm all over the place. What's going on? Right. Employment taxes. There we go. So real-time reporting for benefits in kind. This was already expected, and it's been confirmed that this is going to be mandated from April 2026. So at the moment, use form P11D. Probably your accountant does it for you. Very few people, I think, probably fill out their own P11Ds. But from April 2026, this is something that is going onto your payroll on a monthly basis. So you need to take the benefit. So whether that's a car or private medical insurance or interest on an overdrawn director's loan account or whatever that benefit might be, we're taking that benefit, we're dividing it by 12 and adding it to the payroll. And this is a major change, and it's that shift to real-time reporting and real-time payment of tax and national insurance. So that's coming. The payroll software houses are all aware of it and are making good strides in making sure they're ready. I think it's going to be a problem for employers to manage this. This is not something that normally they deal with it once a year, and it's quite an easy thing to deal with. They're having to deal with it on a monthly basis. I think it's more of an issue. The company car tax has been we've been given a roadmap in terms of what the percentages are through to 2030. So electric cars are going up 2% in 28 to 29, and then 29-30. So it'll be 9% in 29-30 on the electric cars, and it's going to be the same increase on the sort of CO2 emissions for company cars that don't fall into the electric car field. So from 1 to 50 grams, for example, it's going up 1%. So we're going from 18 to 19%. So 18% in 28-29 and 19% in 29-30. And again, the 1% point across for the other bandings as well as we go through. So it just means that we've got an idea of where we're going with company car tax, and company car tax is very expensive, a very expensive car tax, tax anyway. So, but we know we've got some clarity on it right the way up to 2030. So if you're thinking about a company car, you're going to be able to forecast your tax right the way through, rather than sort of saying, right, well, I know what it is for next year, but actually, what are they going to do in the years after? New treatment for double cab pickups is probably slightly disingenuous. So this is
Oh, we've lost him. Hold the line, caller. I will just try and retrieve Gav. Can everybody still hear me okay?
Rog, did you lose me? Sorry.
We did, do. I'm just going to literally in the
Yeah.
middle of a WhatsApp message. You were on double cab pickups.
Sorry, Rog. Say that again.
You were on double cab pickups. We did lose you briefly.
Just for a second, right? Okay, so double cab pickups. We'll go straight back to that. Okay, no problem at all. So on the double cab pickups, so this is it's not really new treatment. So the revenue don't really know what they're doing with cars that masquerade as vans, or vans that masquerade as cars. They've always had a problem. There used to be a list that of vans or cars that are vans or treated as vans. And this all comes down to whether or not you're being taxed as a company car or a company van. But what they're saying now is that if it is a double cab pickup, it will be treated as a car. And this is a high court or a court of appeal ruling, in fact, in the Coca-Cola case. So it's a bit of a blow for businesses that use these. I mean, you all know them. They're the Nissan Navaras and the Ford Rangers, and the you know the types. So these types of double cab pickups, they will all be taxed as cars going forward. So it's a bit of a blow, I think, for the industry generally. But there we go. And then on to the other measures.
We're not sharing again at the minute.
Oh, we're not sharing. Oh, right. Okay. So let's see what we can do about that. Boom, boom, boom. How about that? Is that any good to you?
There we are. Brilliant.
Excellent. Right. Good. So we're just on to other measures. So increased HMRC powers and resources to tackle tax avoidance. So this is particularly in light of COVID. Then HMRC have given themselves more powers to try and tackle this avoidance, which is a good thing. Whether or not they're going to staff that and resource that appropriately, and we'll see anything from that, I don't know, or whether or not they're just going to use it to upset the small business. That is also a possible outcome, but perhaps I'm being skeptical. Mandated tax advisor registration by 2026. So this is HMRC have been really upset for quite a while now that there are a lot of rogue tax agents out there. They're not registered with any professional bodies, and they're out there giving not very good advice. They're also signing people up to sort of collect refunds on their behalf for things like uniform refunds and working from home refunds and things like that, and ripping people off effectively. So there's a lot of fraud in the market at that end, as well as some very, very poor advice, which is leading to tax loss. So HMRC are trying to tighten up on this by mandating registration of tax advisors. So there's a little bit of work going on there. Obviously, all of you watching today use a reputable accountant, so there's nothing that you need to worry about in that respect. But there are people out there who don't, and you've probably seen the umbrella company market. The umbrella companies are ridiculous. They're just. I'm sure there are probably one or two out there who are straightforward and pay their taxes appropriately, but most of them don't. And it seems like every day HMRC are issuing stop notices and fraud notices on umbrella companies. They're really a bad apple, really. What HMRC are doing is they're moving the liability from the umbrella company who set up, run an operation, don't pay any tax, rip everybody off, and then disappear. They're probably based abroad, and the taxpayer purse is affected. What they're doing is they're shifting that onto both the ultimate client and the agent who is employing the umbrella company. So this is mainly for those in the contracting space, and we'll see probably more of that as we look at sort of HPC, and we also look at what's happening out at Gravity as well. So that's an area that's just worth keeping an eye on. Probably Making Tax Digital is another one. So it's been announced that initially we were looking at 50 for people that had incomes of over 50,000 being mandated for Making Tax Digital from 2026, and then 30,000 from 2027. The revenue have said, oh well, actually we think 30,000 is too much. We're going to look at 20,000. They've not given us a date on that yet, but they're still very much committed to delivering Making Tax Digital, is what they've told us. So yeah, that's probably where we are with Making Tax Digital. And that wasn't on my slide. So yes, thank you for listening. Apologies for poor internet connection and dropping out and all of those sort of technical issues. I'm happy to take any questions that we have. Equally, if you've got any questions that you want to pose directly, my contact details are on the slide there. Many of you will know me in any case. If you don't get a chance to take those down or don't feel comfortable contacting me directly, then you will all have Roger's details, or indeed the admin details. Please feel free to send details through to Roger or the admin email address at the chamber, and he will absolutely send everything over to me, and I'll get an answer to you. I'm more than happy to assist where I can. Any questions?
I think it's I'll start by kind of saying that any presentation that starts with it wasn't a budget for growth or entrepreneurship could have actually gone could have been far worse news than you've presented, couldn't it, Gav? Really, to be fair, I think yes, it represents challenges, but you have given an element of actually there are still things that can work for us as well. So thanks for that. Anybody got any particular concerns from the information that Gav shared? And silence befell the room.
I'm very pleased I've managed to stun everybody into silence, which it's either that or the budget was so uneventful that that no one has any interest. But there we go.
There's nothing about R&D tax relief, was there, Gav?
So only to say that the status quo remains. So it's within the sort of the corporate tax roadmap, and it's within that landscape in as much as there are no changes announced in the budget. There have been a lot of changes in recent history on R&D tax. So there are problems at HMRC. It feels a little bit like arse and elbow in some respects, because the government is saying that they really want to encourage innovation, to encourage research, development, etc. And at the same time, the recent changes, which were probably overdue because of some unscrupulous agents and taxpayers circumventing the system, then they've made it quite difficult to make those claims and become eligible for that relief. So yes, no changes announced in the budget, but we're still at the point where actually, whilst the government official line is, yeah, we want to encourage innovation, but actually it's quite difficult to make those claims, and therefore that is stifling innovation in the main way.
Anybody else got any comments? Well, again, we have silence. Gavin, you've done such a good job.
Excellent.
It just falls on me to thank you for your time, not just this morning, but obviously in putting this together for us as well. It's very much appreciated. We will send the slides out, and we'll put a news article out with the key features that you've also sent us across as well. So we'll share that with all our members. Thank you very much for joining us, everybody. I wish you all a lovely weekend, and maybe by Monday, when we've kind of looked through the headlines of what on Wednesday appeared not the most positive message, we can at least try and find some scope for not necessarily maybe great news from the budget, but obviously as well not necessarily the worst. So thank you all, and catch up soon. We will we'll see you all soon at many an upcoming chamber event. Take care, everyone.
Take care, everyone.
Thanks, gents. Have a good weekend.